According to rentals.ca, average asking rents in Canada hit a record high of $2,042 in June. And in Toronto, it now costs $2,572 on average to rent a one-bedroom property, which is an increase of 14.1% year over year. Now, we don't talk about the rental market too much on this channel, but today we're going to chat about why the rental market is increasing, why it's likely to continue going up, and how to navigate the market as a tenant. So if you are a potential tenant, you might want to stick around until the end of this video. My name is McCallum and I run a real estate team in the city of Toronto. If you enjoy this video or learn anything at all, please click both the like and subscribe buttons. I would greatly appreciate it. And if you'd like to book a meeting with me to chat about buying, selling, renting, or just about the market, you can go to the first link in the description of this video and book a meeting directly into my calendar at a time that works best for you. The 1.4% increase in rents from May represented the fastest month-over-month increase so far this year, causing the annual rate of rent inflation to accelerate to 7.5% from the 6.5% annual rate recorded in May. Over the past 2 years, average asking rents in Canada have increased by 20%, or by an average of $341. And as you'd expect, BC and Ontario continue to remain the most expensive provinces to rent in, and this is likely to remain unchanged moving forward. And 8 of the top 10 cities with the highest rent were located in Ontario, while the top 2 most expensive cities were located in BC, with Vancouver being head and shoulders above the rest of Canada. Before we get into the main topics of this video, I have a question for you, and let me know your answers and your thoughts in the comments below. If you are a forever tenant or someone who wants to one day own real estate, why live in a top 10 most expensive rental city in Canada? Your goal in either scenario is to pay as little rent as possible. As a forever tenant, you want to pay as little as possible to invest in other avenues or have cash on hand for living life. And if you want to own real estate in the future, you want to pay as little rent as possible in order to save or invest your way to home ownership. Renting in an expensive city makes those goals very difficult to achieve. I'd be looking at cities like Ottawa, Halifax, and Calgary, where you can rent a 2-bedroom for less than a 1-bedroom in Toronto. And trust me, I totally get why people want to live in Toronto or Vancouver, but there are other great cities out there. All right, let's get into our main topics here. We've covered that rents are going up, but what are the causes? Immigration and population growth are a main driving factor for increasing rental prices. Just a few weeks ago, I made a video about Canada hitting a population of 40 million people and its impacts on the real estate market. And a mere month and a half later, Canada's population has increased by 181,000 people. And if we take a look at Doug Ford's Instagram posts, we can see that Ontario's population grew by 500,000 people in the past 12 months. And to go a little deeper into this stat, we're going to lean on a chart developed by Daniel Foch because it's a perfect visual explanation. On the right, it shows the required number of homes we'd need in Ontario to support the population growth of 500,000. And we arrive at roughly 192,000 homes required by dividing the total population growth by 2.6, which is the number of people per household provided by StatsCan. In reality, we only built 72,000 homes, which leaves a major supply shortfall of roughly 120,000 homes. When we have more demand than supply, the value of the product increases, and that's exactly what's happening right now in the rental market. We're also seeing rents increasing across Canada because of rising interest rates. When rates increased, fewer buyers are able to qualify for a mortgage, forcing those who want to purchase a home into the rental market. Not only is the difficulty of mortgage qualification pushing people to the rental market, but it's also consumer confidence decreasing. If consumers are not confident and comfortable making a purchase, they tend to opt for the safer option, which is widely considered to be renting over buying. Another factor increasing rents in Canada and specifically Toronto is rent control, or the lack of rent control, and high turnover. Properties in Toronto first occupied after November 15th of 2018 do not fall under rent control, which means the owners of these properties can increase the rent by however much they want every year. More importantly, however, is the high turnover rate in the rental market. Regardless of if the property is rent controlled, when a tenant leaves, the landlord can now list the property for a new price closer to market value. And renting a property is widely considered to be shorter term, which leads to higher turnover rates and thus higher rental prices because, again, the landlord can increase the rent for the incoming tenant. As we know, rents are currently high and rising. But why is this likely to continue? We've already touched on immigration heavily, but Canada has incredibly high immigration benchmarks, which outpace the number of housing units we're building. And most newcomers to Canada rent for a few years before they purchase. Rents are also likely to continue trending upwards due to a future lack of housing supply. We already know Ontario is falling behind on 120,000 housing units. But over the course of the last 3 years, development projects were put on hold or even completely canceled, and we've not yet seen the results of this. If a condo development of 400 units, which was supposed to be completed in 2025, is not built, then we're going to see the negative impacts in the future, not today. Last June, Sean Hildebrand, who's the president of Urban Nation, said that developers could cancel the construction of approximately 5,000 new condominium units in Toronto in response to rising material and labor costs. That's 5,000 homes that will not be built to combat our increasing population. The lack of inventory in the future is seriously concerning. But what should tenants do in order to succeed in the rental market today and have the best future moving forward? Well, in order to succeed today as a tenant, you'll want to work with a real estate agent who specializes in the rental market. Know your ideal neighborhoods of focus, gather all your documents, which include pay stubs, employment letter, references, and credit score. And in terms of the actual process, you'll want to see your favorite 4, 5, or 6 properties in one day and make a decision from there. And the reason I say this is because properties can lease very quickly. If you take too long, it could be gone. If you plan to be a long-term tenant, you'll want to focus only on properties developed before 2018. That way, your rent will only increase by the guideline amount, which for 2024 is 2.5%. And one piece of important advice I give my tenant clients is to think about their future plans prior to renting a property. Most of my tenant clients have the goal of home ownership. And because of this, we discussed the idea of renting the cheapest possible property without sacrificing too much. Maybe they can afford a $3,000 rental property, but they could make do with a $2,600 rental, in which case they invest the $400 difference each and every month. That way they save $400 per month on rent, but use that money to make more money, bringing them closer to home ownership. If you need help navigating the rental market, reach out. We'd be happy to help you.